All right, we're live, guys. So Amit, we kicked him out finally. No, I'm just joking. I think he's just in Pennsylvania or something right now, just working. Instead of that, we are actually bringing in Stephen Fiorillo, the amazing, the notorious. He's made it onto the show a couple times before because of his great SoFi articles on Seeking Alpha. If you guys don't use Seeking Alpha, make sure you guys check out the links in the description. And then you'll also find all of the people's social medias, everything. We got Tevis down, below me here, Riley over in the other corner over there. And yeah, we're here to talk about some SoFi every single week, and also Steven's, opinion of Q4. But what did you guys think? Let me hear some thoughts. Hello?
Speechless.
Steven, what did you write about?
Oh, if you want me to start, I'd be happy to. Look, I thought it was solid. Thought it was very solid. I've seen some critiques, which you can argue are warranted, but it was what I wanted to see. Can't speak for anybody else. And on a granular level, if you look at the banking, it's really interesting what's happening. And I've said it in the past that I really do believe the younger generation is going to gravitate toward cloud-based solutions and not going the traditional method of visiting branches. And maybe 2022 is an anomaly. We're going to have to see how 2023 and 2024 play out. But JP Morgan Chase lost 221 billion of deposits from Q1 through Q4. Bank of America lost 142 billion in deposits. HSBC.
If I can bring up your chart here.
Yeah, if you could bring it up, that would be great. It's a good look at what's going on. Wells Fargo lost 98 billion. The orange hadn't reported yet when I made this on Q4. And you look at SoFi. SoFi grew in 3 quarters by 535% their deposit base, and
Wow.
it was just roughly 6.2 billion they added in those 3 quarters. And one of the things that was in the article that I had put was the average member deposit. So while the deposits went up quarter over quarter, the average member deposit went from $298.84 in Q1 to $1,405.76 in Q4. So
do you have a chart of this on your?
It's in
on your
it's in the article
as well?
But isn't part of that huge growth the fact that compared to everybody else, they just have a fraction of all of those deposits, so that they just have way more room to grow?
Yeah, I mean, they're the new kid on the block. They have a minimal fraction of all deposits, absolute minimal. But the big thing that I like to see is that the average member has more of an average deposit, and we're not just seeing more deposits across the board. The number is growing in both ways. And I think that's a really powerful statement. And I would like to see this number keep trending this way. And then you look at it, this is 10 and a half months worth of data in their first year.
It's crazy.
Let's see where they are in 2 or 3 years. This isn't a short-term investment. They could be at 20 billion deposits by the end of 2024. They may even get to 20 billion next year. Who knows?
So if you remember correctly, Stephen, the article, or during the earnings call, one of the analysts asked if potentially we were growing our deposits too fast, and if Anthony Noto was worried about that. He said that he wasn't worried about it. They're not close to where they want to be. Still a ton of room to grow. And then if push comes to shove, they'll put out, newer lending products like, SMB products and these sorts of things. What did you think about that question? Do you think that there's a possibility where we could grow our deposits too fast?
Let me ask you something. What's the downside?
The liability of paying out the interest rate.
But the interest rate's a spread on the Fed funds rate. There's not really a liability. If they're not paying more than the Fed funds rate, there's no liability there.
Yeah, I mean, I guess it depends if they have to pay out the 3.75%, and then things change, then they might have to lower, customer deposits. That might make people dissatisfied.
But are they really going to be dissatisfied when you're getting 0.1% at one of the big banks? It's good. Everybody should know that the rate is going to fluctuate with what the Fed does. And eventually when they start cutting rates, okay, SoFi's rate may go down to 3.25 at some point, the same way it grew to 3.75. It's part of the game. If you want a guaranteed rate, you invest in a CD or a T-bill.
Yeah, and everybody's rates are going to go down. Everybody who's high right now. I mean, bankers still
it's not a problem that is just dedicated to SoFi. Everybody's going to have to face that. And because SoFi is a cloud-based bank without having the overhead these other banks do, they're in a much better position to pay the high interest rates, whatever the Fed's fund rate is. So I'm not worried about it one bit. And the more deposits we get, the more loans we can make and the more revenue we can generate.
Now, some bears would also say that that's also dependent on if we can sell those loans. You know, one bear in particular, Chris Patel, saying that, you know, if you know the market gets too bad, that we might be stuck with a handful of high default, crappy loans. Do you find that, you know, do you think that we'll fall into that, or do you think that we'll keep FICO scores high, average incomes high, and then we'll kind of be protected because of this, or, you know, what do you think?
I can't predict the future, and I can only speculate on what may or may not happen. Nobody knows. But the way that I look at it is, and this is just my own personal opinion, because they have taken such a strict stance on credit score, annual income, they are in probably a better position than other banks. So I really am not too concerned with that because their level of due diligence is good. And I've said this before, they have actuaries and they have a lot of people creating the models, doing a risk tolerance deviation. And what they're doing is fitting within that model. Who am I to judge them? I'm not worried, but that's me.
Yeah, they have a lot of people hired for risk. Like if you look at all of SoFi's current job openings, like one of the biggest ones is just fraud and then also risk. And again, they're a tech company for the based 10 years ago just to do the single thing, which is make profitable loans.
Let me bring up my chart here because I also wanted to show one other thing on our deposits. However, my Google Drive is not loading right now. So.
Oh God!
Yeah, try Bing.
Yeah.
Bing Drive.
You know what's so funny? I pay for both. I have Microsoft 365 and I have Google One. So I'm I don't pick favorites.
How much are you storing that you need both of them?
The truth is I have one for my, you know, YouTube, and then I have one for my actual job.
I forgot that you do video content. Okay, I retract that.
Yeah, so I find Google, anyway, this is nerdy stuff, but Google Drive's easier to share with, you know, editors and such. And OneDrive I find is really good because you can just sync right to desktop. Anyway, okay, done. Let me show you guys something else in terms of our loan portfolio. And sorry, in the deposits. Okay.
Okay. Because I want to talk about loans also. So do your thing.
Yes. Okay, so bringing up the trusty spreadsheet here. Our loan portfolio, this is from Q4 2020. So don't trust any of the you know, quarter over quarter numbers because I'm just hiding the other quarters. But over time, as you can see, our loan portfolio has gotten big, especially whenever we get that you know, the bank charter. Then it starts to absolutely skyrocket because we can hold the loans. And then whenever we're actually looking at our interest paying deposits, ever since we have gotten the bank charter, now we're seeing that, you know, crazy growth there. You can also see what percentages we're covering on, you know, what's actually covering the loan portfolio.
Can you explain this a little easier for me? So like the loan portfolio, I see 13 million Q4. What is that? Is that...
So that's how much we're holding in terms of home loans, personal loans, student loans on our books. All right. So those are, you know, interest paying loans on our thing. So if any of that 13.8 billion actually defaults, then we're going to take the hit. If people continue to pay their interests, we'll get that interest as a net interest income.
That's 13 billion.
Yeah,
13.8 billion. Well, that's the total origination amount. So if they're paying 16% on that or 15% per year, then yeah, that's pretty much what we'll make. But obviously, home loans much less than that, student loans much less than that. But pretty much what I'm comparing here is the deposits. So this one, let me just holding that up for you guys as well. And then, and I'm looking at all this. So pretty much what we're looking at is our deposits, now that they're actually starting to increase, are being able to really lower the cost of our funding for these loans going forward. Okay. And the difference now, what they actually said on the quarter is that we're now at a difference of spread between our warehouse facilities, which is this line above, which I do not have numbers for yet because we just don't have the 10Q. Hopefully that'll come next week. But once we actually get those numbers, the difference in spread, okay, the warehouse interest to the average deposit interest was supposedly 190 basis points, which is just absolutely incredible. It keeps getting wider and wider, which is just, it's awesome to see. And also makes us, funding our loans going forward. And this is why the stock is jumping, or at least what I believe is that, what we're actually realizing that this is working, and if defaults don't come very, very soon, SoFi will be fine. And there's even some analysts that I've been reading about lately that also talk about that if there is some sort of big, let me drop this out. If there is some sort of big credit crunch, that companies like SoFi might actually benefit a lot from everyone refinancing, that there could be a massive refinancing surge, and SoFi will be at the top of the list of that. So it's also a really, interesting take as well.
Well, I also saw in that same chart that they lowered their credit loss provisions. I know in the call they mentioned that their default rates were like at 2019 levels and like lower than like pre-pandemic levels, which is interesting, right? Because all the other major banks are increasing their credit loss provisions. In other words, they are expecting tougher times with more defaults ahead, whereas SoFi just lowered theirs. And across the board, it seems like the wires are crossed between what many other players are doing in terms of the RIFs. SoFi is hiring. In terms of raising credit loss provisions, SoFi is lowering them, and so on and so forth. And that sends strong signals. Yeah, go ahead.
I was just going to put a devil's advocate on that really quickly. Is that Lending Club did lower their loan loss provisions, and actually at a higher percentage than SoFi. Continue.
Did they also lay off a bunch of people?
Potentially. I don't even remember.
I think they did.
Yeah. So the point being, it's interesting to see the duality between what SoFi is doing and what the big.
What do you think their critical success factor is? Like, what do you think? What's making SoFi different from all these other players?
Anthony, no.
They're just able to do things more efficiently, I would assume. I don't know. Steven, maybe you have a take on that?
Look, I don't even think some of the critical success factors have played out yet. And one of the big ones was the bank charter because it lowered their cost of capital tremendously. He said it in an interview. I don't remember which one, but I feel like they were paying 2.1 or 2.2% when they were borrowing. And now it's just funding it from their balance sheet. And now they can just give the spread. I believe 2023, they're going to start seeing the synergies from starting to switch everything over to the cyber bank. And I feel like that was 75 to 90 million a year in savings that we're going to see annualized. There's just so many critical success factors that have not played out. And Tannor, if you could bring up the second loan chart that I had in the article, the bar graph. I believe somebody showed the line graph last week, but student loans, when they come back, is going to be huge. So
you want the line graph or the bar graph?
Bar graph, please.
Okay.
So this is annualized for the past 3 years.
Sorry.
Yeah, I'll wait for Tannor to get up. Perfect. So total originations grew slightly in 2022, but you had a Fed that kept hiking rates and home loans fell off a cliff, and student loans really didn't do much at all. It was all led by personal loans. What happens when student loans come back in 2024? I'm writing them off for 2023. Don't care about them that much. But in 2024, they're going to be back. And what happens when the Fed actually starts cutting rates again, whether it's this year or next year? Once again, this is not a short-term investment. But when the Fed eventually cuts rates and mortgage rates come down to 4.5%, 5%, and you have more churn in the home market, more people getting mortgages, and you have student loan originations coming back and personal loans at this rate or possibly growing, their total originations are going to explode in maybe 2023, but I would say very high success, critical success factor of 2024, them exploding when all this comes back.
Yeah. Yeah. And I keep thinking like that. I find that the research community at SoFi, at least since, since I've been here, has gotten so much better with the research that I find that you're putting in, Stephen. I think it's very clear with the bar graphs that people get to see a visualization of just this, easy information. And then Chris Hager's putting out these amazing SBC charts and everything like this. And it's showing, the old problems that we used to have are being actively addressed at SoFi.
And let's just bring it right out. What you just said, hit the nail on the head. You have the guy, Anthony Noto, the guy saying, good chance we're going to be net income positive Q4. And that's what people have been complaining about that want to be a bear. And you got the guy saying we're going to be net income positive. Okay. Okay. What's there to complain about when that happens? Is it not growing quick enough?
Oh, yeah, that'll be the next step. Yeah. There'll always be a next step, right? Like Q1 right now, they put out, in my opinion, everyone has their own opinion, weak guidance. But it's just, that's what they always do. And it's actually starting to make me, not worried, but just annoyed in a way that since we've been a public company, we've beat on every single earnings except for one where we came on the high side of the guidance.
Well, let's not forget, they revised, 4 times in 2022? To the upside.
Yeah, well, once the push came.
Yeah, I mean, that's not a coincidence, right? I mean, they have an executive team that knows how to play the game. They know what metrics these analysts are looking for, and they just sandbag their numbers, provide conservative estimates, and just over-deliver.
Yeah, think about what Noto used to do for a living.
Yeah, he was at Goldman, right?
He was on the other, unlike other CEOs, he was on the other side of it. He was one of the guys at Goldman. He knows what to say.
Did you guys
To
hear?
be fair, do we think that Anthony Noto has any part in the guidance? Like, isn't that really Chris Lapointe's whole job?
Do you think the CEO doesn't have any part in the guidance of the company?
They're having a conversation
it is the
before
CFO's job to
and
do all
shaping
that.
what's going to be said.
I'm sure Anthony Noto's not single-handling, this job. I'm sure he's delegating. And from what I know,
it's a team around that's coming up with everything. But at some point, they're having a conversation and deciding what we're going to say. And I'm sure Noto is giving some guidance of what the street is going to look for, what everybody's going to look for, and what they should say based on the numbers that are being put in front of him.
Yeah, and that could be as simple as a conversation between himself and Chris Lapointe and the rest of the executive team, where they expect to come in at X number, and then they say, okay, let's drop 10% of that, and then that's a number we present publicly. And so their internal targets are more aggressive than what they're externally projecting, which is also why I, way back when everybody was saying 2024, I was saying, oh, we could have profitability in 2023. And now I'm saying, oh, it's I'm expecting for it to come sooner than Q4. I wouldn't be surprised if we are profitable in Q3.
That's
just
crazy.
Because of that concept.
That's crazy.
Look at what they said their 2023 high is. They said $2 billion net revenue, 280 million adjusted EBITDA. I mean, that is still great growth, and with their track record, they could break that.
And the truth is like everyone's wanting this. Oh, sorry. Everyone's wanting this, gap net income, right? So a PE number shows up, but the truth is we don't even need it. Like we are actually, whenever it comes to a burn rate, we are positive. Like we won't need to go externally for funding. We actually can, survive any downturn if it is just about, no outside VC funding or anything like this. We will be able to survive. We are growing.
Yeah,
And so
you understand that, Tevis and Riley understand that, but it's more for the street to believe in it and other people that don't pay as close of attention. That net income number is important for people to take it more seriously. I mean, you still get people thinking SoFi is going to go under.
But that's amazing though for the people like, or I shouldn't say the people, for me specifically. Okay, I'll just speak for myself. That's potentially alpha. Like, you know what I mean? If people are thinking that we could be potentially burning cash right now, then understanding that we're not, and understanding that the majority of our actual expenses on a net income side or a net loss side are non-cash charges, then you know what? There's a great opportunity to see some real appreciation in the stock much faster than, what people are actually pricing in. We're already seeing this right after Q4. I mean, guys, a month before Q4, Anthony Noto was buying at $4.30. And everyone was going, I mean, it's a great sign to see the CEO buying, but like, it doesn't mean too much. They're still a risky company. And then people are going, well, it's at $7, $8 and I'm adding here. Okay, well, wish you would have added at $4.
They have, look at their balance sheet. They have 1.4 billion in cash, short term, liquid available today, and another 400 million in long-term investments. I mean, their liquidity is fine.
Yeah. I don't think the minority of people who are arguing that SoFi might run into liquidity problems is just getting smaller and smaller. I mean, now it's the majority of people are just saying, oh, well, they won't reach profitability in this quarter, but it will be this quarter. And it just seems like semantics at that point, because the trend is going in a clear direction. The thing that I don't like is that, and this is never going to change, it's that it will always get bucketed into groupings of these similar institutions. And the fact of the matter is that many of them might be stagnant or declining, whereas SoFi is gaining every single quarter. And it just seems a little unfair, but that's also where the opportunity is, right? So
people are going to not look at the numbers as closely as some of us. And we should spell it out for everybody. Look at a quarter over quarter net income loss. In Q2, it was 95.8 million. In Q3, it was 74.2 million. In Q4, it was 40 million. 40 million. If they keep going at this trajectory, theoretically, if Noto's right, they only have 3 more quarters of being not profitable on a GAAP basis. And if it's 40 million this quarter, the most that they could burn on a cash rate is 120 million over the next 3 quarters. If it stays at 40 each quarter and just stays stagnant and doesn't continue to decrease, and they have over $1 billion in cash. I mean,
this is the number that he's talking about. Just so everyone's aware, this is the number that he's talking about in terms of the losses. It is, changing very quickly. I can't seem to click away from it. So one of the things that I've shown off here is net incomes and losses, right? And then total net difference. This is just of a net difference of revenue. So once we hit 100%, then we'll be in profitability. So as you can see, we haven't quite hit it yet. Wait for the chart to start turning green. However, since we've practically had a bank charter, 61%, 66%, like we are headed on our way up, and all while, we're seeing massive growths in our revenues as well, which is the top and second line here of revenue and growth. So we're also seeing growth and better profitability. But obviously,
I have a question for the 3 of you. What is your time horizon for this investment?
10, 15 years.
Yeah, 5 to 10 minimum.
Yeah, I'd say something along those lines too. I'm definitely prepared to hold at least, with every stock, if something changes fundamentally in the company, my
Of
time
course.
horizon will. Yeah, but aside from that, I don't have. You know what? I'm
Ba-
living comfortably.
based on the information
and,
you have today, not if your investment thesis changes, what would your time horizon be?
20 years. I don't know. Like it's a great
So
company.
we're
You can get it
all
in
in the
before
long
dividends and
term.
before.
Long term,
Anybody who is investing in this that is not in the long-term camp, these numbers aren't going to matter to them. But
Yeah.
if you're looking from a long-term view, the way the four of us are, because I've always said this is a 2030 and beyond for me, probably 2035, unless it just goes up a ridiculous amount. I decide to take profit. But
What is that? What is that amount though? Like, what is something so tantalizing that you would decide to take profit earlier than when you had planned? Have you thought about that number or?
Yeah, I mean, look, I'm not going to say how many shares I have, but SoFi hits 80. There's a good chance I liquidate.
Fair enough. I'd
If
probably be
SoFi
that
hits
same game.
$80 a share with this current amount of members, level of growth.
I'm saying if it hits 80 in 2027, I'm not saying if it hits it this year. I'm just saying if it hits 80, it's a hard chance that I'm going to hold all my shares. Like I'm going to probably liquidate half. I mean, I have a lot of shares, but I'm not going to sell all of them. I mean, look, this is a very long-term investment for me unless something changes. And these numbers are great. And my thing is, man, they become net income positive now. Maybe in 2027, they start paying a dividend. And then I never sell my shares.
No way. There's no way it's going to happen.
You don't
They're
know that.
following the Amazon model, and Amazon doesn't pay a dividend. Like, I think
Amazon
they're going to
barely
pass
makes
this on to the
money.
consumer.
Amazon barely makes money. And I'm a shareholder,
Yeah,
and
that's-
I'm being very critical of them. They generate over $500
Amazon
billion
could make
in
money if they
revenue.
wanted to. That's the point. I think
Look at
that's
their cash
I
from
don't-
operations.
so-
You may rethink that.
Just
Yeah.
bring it the
Look
conversation.
at the actual numbers. Amazon lost over $7 billion in their international affairs this year. I believe they lost over $2 billion in U.S. The entire year, 100% of their net income was generated from AWS. Without AWS, they would be losing billions upon billions upon billions. And growth is slowing in
reason for
AWS.
that is because they go the extra mile when other companies are way more safe. Like there's
But
like
if
the
they're
whole,
losing money, it doesn't matter.
Okay, point being, this isn't an Amazon podcast. Look, the question
I mean,
around the question
but,
around
like-
the dividend is, hold on, Riley, just a sec.
Okay.
It's a super straightforward question. They will pay a dividend when and only
I don't
when
think
they
so.
have. Just let me fucking finish.
Okay, good.
When they have no other use that yields better ROI for
Of
their
course.
money. And now I don't think that they're going to pay a dividend within the next 5 to 10. Why? Because of their consolidation into their actual cores. They're going to do that through different acquisitions. So there's a lot of ROI potential for them to spend all of their money. But if at any point that runs out, then I wouldn't be surprised if they start paying a dividend. Let me put it that
Yeah,
way.
it depends how much money they're making. I mean, if they're really raking it in the way some of these other banks are, there's no reason why they wouldn't down the road 8 years from now, 10 years from now. But I agree 100%. They have a lot of growth ahead of them. The dividend is the furthest thing from their mind right now. But it could turn into that if you believe that Noto is going to make this a top 10 financial institution at some point, which I believe. I don't see why they wouldn't at some point.
Or if not a dividend, they'll do a poor man's dividend. They'll just buy back stock.
That's fine too.
Don't y'all think that, like in the long term, like their strategy is to just give as much back to the members of SoFi as possible? Like, I mean, like there's no reason why.
The investors will dictate what their objective is, and most of the time, especially during banks, or especially with banks, it's to give back to the investor.
Yeah, most banks pay
Yeah,
a
but
dividend.
why? Like, well, I mean,
because that's why
they
we're
can't
investing.
grow, right? Like JP Morgan is like the biggest bank in America because they have all the money, and there's no reason for them to give it back to the people. Because why? Because like there's no reason to grow.
They also pay a dividend, though.
They pay a 3.5% dividend and buy back a ton of shares.
Yeah, exactly. That's like where I don't think SoFi is going to do that. Like, I mean, like maybe one day, but like it's going to be a long time before they do that.
Oh yeah,
Like,
I'm not saying
Yeah,
this
yeah,
year,
I
next
don't
year.
think in the next 10 years.
down the road. Listen, down the road it could.
Yeah.
If it does what we think it's going to do, there's no reason for them not to down the road.
Yeah.
Because it's
But
like,
the real
okay,
question is, are they going to continue to grow?
yeah, and like it's a moot point, Riley, because at some point they're just going to be, as a profitable company, still growing. What are they going to do with all that money if they don't see any opportunities? I mean, like the Googles and the Metas and whatever, they're just hoarding cash, but they're going to use that cash to buy up smaller players whenever they see ROI, or they're going to buy back their stock. I mean, Facebook just announced what, 40 billion buybacks. That's huge, right? That's like 10% of their market cap.
Wow.
And eventually it's either buybacks or dividends. Like, what are they going to do with all that capital, assuming they're profitable and still growing later on down the line?
And don't forget,
and
buybacks are super important because they artificially increase EPS automatically because now your earnings are distributed across less amount of shares.
Yeah.
Right. This is what happens with every stock. Like SoFi right now is a big growth company, but so was Meta back in the day. And, even before that, Apple was a growth stock. And now I think I read some statistics saying that they just crossed, distributing $1 trillion to investors, which is such an insane statistic. And that's from a growth story.
Yeah.
Sorry, Steven?
No, I'm going to find it for you. The chart on Apple is insane. Give me one sec. It's one of the craziest things I've ever seen.
It's just a cannibal.
Yeah, but growth is still their objective. It's not that they, but they're growing honestly too fast, and they can't spread themselves out thin enough to just buy every company underneath them because, a company needs to be.
The link I just sent you.
Sorry, where did you send it?
Private chat.
Okay. 404 not found.
That's impossible.
Oh, sorry. It split the link. It split the link. Let me try it this way. Yeah. Okay. That's impossible. Okay. Let me.
Since 2012, Apple has returned $740 billion of capital.
It's insane.
Think about how much money that is that they've returned in just over a decade to shareholders.
That's crazy.
They bought back $573 billion worth of shares.
Wow. And you know what? This is the amazing thing about investing in a SoFi or something like this at this point is that you always look back at the early investors into Facebook or something like this and be like, wow, what an explosive stock. And now they're actually starting to distribute back. But you have it back at the growth story level prices. So, if we buy, SoFi at $5 today, and then it runs up to 100 10 years from now, 20 years from now, whatever the time, right? And then they'd start to distribute a 1% dividend on $100, okay? If you own it at a $5 cost basis, you're getting a 20% dividend on your original investment. So that's sort of the importance of investing early is that
think about it, 10,000 shares, that's 10 grand a year in dividends while compounding each quarter.
It's crazy. It's absolutely crazy. And this is I'd say 95% of every investment or every mistake I've ever made in investing has always been from selling a growth stock too early.
Yeah,
you know what I mean?
same.
I've invested into great companies and thought that I had a great time to sell and then it was going to run down and then it continued running. Yeah. And I watch the All In podcast too much, but they always continue to say like let your winners ride. And this is why Steven's probably saying that, it would have to hit $80 right now for me to sell because
I don't
the future's so bright going down the line.
I'd be crazy not to take some off the table at that point.
Well, yeah, if they hit $80 tomorrow,
80's a stretch, but you see people selling now for the price to revert back to $6 or the price to revert back to $5. It's like, is it even worth it?
I can't time the markets. I'm not playing that game.
Right. Count the amount of billionaire day traders.
Look, some people are successful. I don't have the time.
Fun.
And you know what? It's such a low success rate. It's not worth the stress or the aggravation. Hold it, set it, forget it. And this is a 6.4 billion market cap company. This could be, look, I hate saying these things, but why can't this be a 10x in 10 years? Why not? Why can't this get to 64 billion market cap? Think about some of the companies that are 64 billion market cap and the revenue and operating income that they generate. So if I could get there.
Especially whenever you consider like a reversion back to when growth stocks are in favor. If there is a change in the way people actually evaluate stocks, which is a constant back and forth, right, between value and growth. With worse fundamentals and before a bank charter, SoFi was valued at $25 a share. And you could say that's euphoria in the market, which it was, right? But that can happen again in the next bull market, maybe 10 years from now. And then also the fundamentals have also increased so much since then. Right now, we're facing so many headwinds. If things revert and we start to see student loans come back, people actually put risk on into the markets and actually, feel comfortable investing in these growth stories again, things can turn around very quickly. You see companies like Coinbase, for example, going up 100% in the matter of like a month.
Think about this, Snowflake, and completely different company, but Snowflake's market cap is $52 billion. Okay, $52 billion. They generated in the trailing 12 months, and I believe they reported already, $1.86 billion in revenue, and their net income, they lost $721 million. People are paying over $50 billion market cap for a company that loses $721 million.
But like you said, very, very different.
Very different company, but still, a dollar of profit is dollar profit. Doesn't matter what you do to earn that money. If you're a Coca-Cola, Apple, or Starbucks, doesn't matter. Revenue's revenue.
It does matter though if next year the $1 is going to be $5.
Well, but that's a growth rate. I'm just saying a dollar is a dollar. Does not matter where it's produced from.
Even
like
if you
right now they're losing $721 million, and it's a $54 billion market cap.
Yeah. So even if you frame it a little bit differently, if SoFi does a 10x from here and is whatever mid 60 billion, 64, 65 billion, that's still like 15% of JP Morgan's cap today, something around that ballpark. And you might be thinking to yourself, well, I don't know, that it might be a little grandiose to compare SoFi to JP Morgan. Even if it is 15% of JP Morgan's cap today, what we're saying SoFi could be in 10 years to represent a 10x. However, then you think about Galileo, and very, very shortly, in a couple of years, especially in 10 years, all of the major financial institutions, if not all, I'll throw you a bone, I'll say 80% of them are going to be on Galileo's network. So, I mean, SoFi alone, like the banking and the loan portion, could be a 10x in itself in 10 years, and it will be feasible, at least in my mind. But then when you add the Galileo X factor on top, it's just all cards are off,
Extrapolate that one step further.
Can I read a quote from you, Stephen?
Go ahead.
A quote from me? Go for it.
I'm going to read a quote from Stephen here. In conclusion, I think SoFi has the largest amount of potential for capital appreciation out of all the equities I am invested in over the next 5 to 10 years. We have yet to see all of SoFi's businesses operate in unison, and all of these quarterly beats have come through adversity and had to overcome major external obstacles. If Mr. Noto says that they will be net income profitable in Q4 2023, I believe him. The question becomes, what will SoFi accomplish in 2023 and 2024 when synergies between Galileo and Technisys are recognized? I'll leave it there.
So when I say extrapolate it further, I mean, yes, everything you said is probably, I would hope, come to fruition with Galileo, but let's think about the archaic banking system that the regionals and even some of the larger banks and thrift banks are on with their Band-Aid spaghetti systems. They do not have cloud-based infrastructure. They're all going to have to switch to it, and they're not building their own. And got news for everybody. Technis is going to pick up some critical business in the next 5 to 10 years from a lot of these banks. And guess what? If they're using Galileo, they already have more of a reason to use Technisys over somebody else. It is a synergy that people can't even wrap their brains around and don't even understand at this point.
Let me pose a question real quick, because in 2021, in January, the Q1, Noto specifically talked about that they're trying to be the AWS of fintech and that they're targeting banks and trying to make infrastructure for banks. Now it feels like Galileo and Technisys and the overall sentiment, like how Noto puts it on Q4, they're targeting B2B players more so. Like that, their whole strategy is like focused on B2B. And I haven't
I
heard a
still
lot
think
of.
they're going after the big players.
I do too, but I mean, their Galileo is building tech right now. Like they're working on building tech. Like their devs are actually building tech for B2B. They're not building tech for banks that we know of. Like everything
I
that they're
think
releasing is B2B stuff.
I think
So
we'll really see it come forward full circle after everything is built out and SoFi switches all their operations onto the new platform. Because what better marketing tool is it than this is what we use? And we built it to be successful, and we're going to give you the same product we use.
Mm-hmm.
And what better litmus test is there than SoFi, which at that point will be however big 360-degree financial institution on this proprietary software.
yeah.
And the integration between Galileo, which is going to be one of the most important things with the back end. And that's the other thing. Show me another bank that owns the entire back end the way SoFi does now today, and the way that they're going to own it in 2 years from now when everything is integrated together. I can't think of anybody. They're all outsourcing. Nobody owns the back end.
Yeah. Do you
The
think the
AWS
strategy has?
FinTech blueprint's genius. It's just going to take a couple of years to really pick up.
And I remember in 2006 or maybe 2009 when Jeff Bezos was talking about how like his AWS was a business miracle because he had no competitors for 7 years, and then all of a sudden, Google, Microsoft, they all realized 7 years too late that they needed to operate in this space. And you're right. I don't think there's anybody really trying to like capture the type of net that SoFi is trying to build for.
And think about this, AWS was just one dimensional, right? It was cloud service. So they built a product that they needed for their hosting to save money and become more efficient. And then they monetized it and sold it to everybody else and had, I think, 33% of the market. This is twofold because of Galileo also. So it's not just the cyber platform, it's the payment processing and everything in between.
And also, just Riley, just to build on that, a contrarian take, I would say that after a while, having big competitors like huge logos enter the space trying to capture market share just validates the further need for that market, and actually, in a little bit of a contrarian take, helps you, right? Because after, let's say in 5 years or 7 years, big banks are going to realize, oh, wait a minute, this is a really smart business model from Galileo to own the back end infrastructure. Let's start our own competitor, right? And then financial institutions or B2B companies, whatever it is, are going to be competing to see, okay, do I want to get on Galileo's product offering or do I want to get on whatever the other competitor is? And Galileo has just had a longer tenure of doing this with more to show for it. And so just by having more competition in the space from big logos, it validates that space itself. And thereby it can help the market leader in that space.
I think sorry, just one little point to add to that. I actually think SoFi's strategy has changed a bit. I think they're building a marketplace like the AWS marketplace. You hear all their partnerships with DataVisor and Technisys and Galileo, synergies between like North America and South America, LATAM. And then all these bindables, they're making all these strategic partnerships, and it's like building a web. I think what they're trying to do is leverage Technisys Lego block like infrastructure model where they can plug everything in and then just build like a marketplace for fintechs to come like, oh, I want to build a buy now, pay later company. I go to SoFi's marketplace, and then I download some
but
like
Riley, I think that sorry, Tannor, last point, just to respond on that, and we can get into the chart. I think like us making hypothesis on what SoFi's strategy is based on the little information we're given is a slippery slope, because, for example, like this latest quarter, they booked new clients what was it, like 11 new clients, something like that, 13?
On Galileo, 16 on Technisys.
How many logos did we actually see? And so I think the bindables and all the small logos that we see, we're just like spoon fed these little logos and the buy now, pay laters and all of this stuff. And we're trying to piece together this puzzle where we're missing half of what it looks like. And so a lot of their actual strategy might be hidden behind these NDAs and logos that they can't actually talk about.
Yeah.
So I just want to say really quickly, I got you. You know what I mean? You're too funny. Like, I know where your brain is going, and it's great. You know what? It is true. Whenever we post 11 new clients, we might see 3 of them. Who are those other ones that we're not seeing? They could be anyone. And who's paying? Who's paying to not be seen? Because some companies don't want their tech like they don't want their competitors to know their fees. The ones who do want you to see their fees probably also need the little bit of extra push. So
the B2Bs could be the only ones that are okay with sharing their logos. And literally we can have 11 and have 2 B2Bs and have 9 financial institutions. And then we'll be like, oh, we're going in a B2B space because we talked about the 2 B2Bs.
I'm pretty sure that if SoFi actually runs a major financial institution in the US, like they have to disclose that to the public. I'm like, if Wells Fargo is using. Well, really? Like, because that's the most regulated part of the entire US is just the banks. And
they don't, man. They don't have to.
So?
These are all the players. I guarantee you, Galileo has large financial institutions that they are not telling us about. And Tevis, man, okay. Can we move on though? I don't want to stay on that. Okay, so just really quickly, you were just bringing up the competitors. Who are these issuer processors that we're competing with? And it depends on who's using what, but pretty much Galileo competes actually pretty highly on this list. However, Stripe's in this list, so it's like, okay, well, they are definitely the large dog there. But for the most part, we probably placed 3rd in that list. There is something else. I'll put this link in the chat possibly, or maybe one of you guys can. There was a chart I wanted to show you guys. They were bringing up, okay, this is Galileo's. Perfect. They were showing how, you know what, these are all the user-facing apps. This is how Galileo is servicing these different clients. This is just, examples of these clients. And then the issuing banks. What you're not seeing on any of these issuing banks is SoFi's name. But SoFi has that ability now. So the greatest thing about SoFi is, like, not only are we making relationships with these clients, we're offering the issuer processor, but then we can also be the issuing banks. And they will obviously take a fee for that. So to Steven's point, what other bank is offering that full service? Stripe is not even offering that service, including being the issuing bank. So SoFi, however, it might take a very long time to get to that point. We can own the full process, which also allows for a lot of pricing power. And no one is really pricing that in and saying that, SoFi doesn't have a moat. We absolutely do.
The AWS of fintech, okay?
Oh.
Technisys and Galileo is 2 prongs. SoFi Bank Charter is the trifecta, because just like Tannor said, they can be the sponsor bank for any of these neobanks that want to go on their platform. It is something nobody else has.
Mm-hmm.
And you want to know something crazy? And what I just read recently on an article that they said is that if you want part of their products like Galileo Buy Now Pay Later, which if you guys see any I don't care if it's a large bank like Citigroup, or if you see a small player like Chime, if you see them come out with a MasterCard Buy Now Pay Later, they're a client of Galileo's right now. No one else is offering it.
100%.
And we're getting a fee.
And we're getting a larger fee than both debit processes and credit. Buy now, pay later. I didn't realize this. The interchange rates are the highest across the board than any other card or any other process. So it's very, very, enticing for both the neobanks to take over, but also for Galileo to service. And then not only built into Galileo's process, if you want their buy now, pay later option, you can't just walk in and selectively take that one product. You also have to have our deposit accounts, right? So this is sort of building out like, hey, you need this one product. If you want, the buy now, pay later to be able to compete with the Affirms or, Afterpays and these sorts of things. And that's going to build out that sort of space. And that's a product, the buy now, pay later, that's both offered by Technisys and Galileo. So very, very exciting.
I think the future is very bright. I'm very excited, and I stand by. I own a lot of different positions. Some of them have really played out because I've been investor in Meta for a long time and Amazon and whatnot. But from here going forward, SoFi, I do believe SoFi will be a 10x. It may not be, but my investment thesis over the next 10 years, I don't see why it can't be. I mean, it puts them at 63 billion.
I think to your point, there's so many catalysts. Like there's so many catalysts, not for like short-term like stock movement, but like long-term, like just making this company grow on compounding effects.
Think about customer psychology. Think about where the younger generation is going to bank, and not just where they're going to bank, but the cards that they're going to have issued to them and have in their wallet. Mm-hmm. Less and less are going to be from JP Morgan and Bank of America. When all the neobanks win, SoFi wins. Yeah. When these other cloud-based solutions win, SoFi wins. And that's part of my investment premise, that it's not just SoFi, it's all the other options that are going to take away market share from the traditional banks.
Tannor, I want to ask you a question real quick, because I tweeted a few days ago about Robinhood, and I think Robinhood's market cap is not proportionate to how good of a business they are. It's proportionate to how well people think the product is, the Robinhood app, and how it's just user friendly.
I think it's equivalent to how much cash they have. But
yeah, man, let's disassociate this thing of it has a great user experience, it's great for users, when we know the fact of the matter is that the biggest movers in the stock are going to be funds and analysts, and those people care about the balance sheet and the numbers. I guarantee you half of the analysts on Wall Street, maybe 3/4 of them, have never even seen the landing page on the Robinhood app, let alone been power users of it.
Where they have over $6 billion in cash right now?
I think they have a market cap of $9 billion, and I think they have a net cash of $7 billion or something. So people are really paying $2 billion for the whole company.
Yeah,
with all growth included.
It's wild.
Yeah. If they get any lower, I mean, a large bank could go in, buy all their tech, and then just liquidate all their assets and make a great buy from that company. And so I covered Robinhood earnings, and I know people aren't here to see Robinhood, but it is important to pay attention to whenever you're talking about, a company, for example, where you're not seeing anyone really come to that. More people joined SoFi for our checking and savings, our SoFi Money product, than they did join Robinhood's 4.15% checking account, which is a crazy idea. They're beating us in terms of APY, and yet 1/3 of the amount of members joined than us, even though it should be the complete opposite. Because whenever you think about referrals, you're talking about, okay, what are their total cumulative amount of accounts that could refer out? SoFi's is 5 point something million. Robinhood's is 23 million. So the amount of people that could be referring out to Robinhood, it's crazy. And I don't know why, but SoFi's business model is so sticky that the users love them. And it's a reason why 150 plus people are listening right now, is because something about SoFi creates a great user experience, cult-like in retail. And, once that catches up on Wall Street side, then you might see, valuations increase.
From the
it's about to get way
Robinhood
better
earnings,
too.
the number that was really detrimental was the MAUs declining. I mean, I went through that presentation.
800,000 quarter over quarter.
It's unbelievable. It's unbelievable. In Q1, I'm looking at right now, Q1 2021 was their highest at 21.3 million MAUs, monthly active users. It's declined to 11.4 million.
Wow.
It's
Can
been a
can you put
complete.
that chart up, Steve?
Tanner,
probably can get it up.
you got it?
Because that's like
give me a
Robinhood is
second.
not in a.
This
site-
is wild when you look at slide number 7 on the presentation.
like they're not in
Yeah.
a place in their business where their MAUs should be declining right now. Like they're
And-
so young relatively. They should be.
Remember what I said about
Well-
SoFi's deposits per customer, how it's been going up dramatically? Robinhood's from Q1 2022 went from 93 to 62 billion. I mean, their assets under custody have just been going down.
So the only thing I'll say is that I do think that their monthly active users should be decreasing because they're a trading platform and the markets suck. So although this is the best time to buy,
People want
potentially, that's not what a
more-
retail investor thinks.
But think about it. If you're trading, why wouldn't you be using Thinkorswim or like a real platform? Like, why would you?
No,
use
I
Robinhood?
honestly don't agree with that.
Somebody
I-
explain this to me. Why wouldn't you use Thinkorswim or one of the real platforms instead of Robinhood?
Because they're more complicated. I'm actually a massive believer in Robinhood's platform. It makes trading easy, and I do think that can be dangerous, but it's also very helpful.
There's also confetti. So
Confetti, Amit.
Yeah.
Confetti.
Yeah.
No,
This is
I
scary
do
for
think.
Robinhood.
Sorry.
This is scary. It's almost 50%. It's gone down by.
Oh yeah. So just really quickly, 800,000. That's 0.8 million monthly
Yeah.
active users quarter
Quarter over
over quarter. Okay. SoFi didn't even gain that many members, as many as they lost. Okay. and these companies are considered competitors. We are not competing with Robinhood. We are dominating Robinhood. Let me go ahead and I'll just bring up another quick slide. Or maybe I don't think Tevis likes this slide, but you're getting it anyway, brother.
Oh, what is
All right.
it?
It's the website traffic.
Oh, okay, yeah.
Something
Okay,
that never worked.
remember that Robinhood has 11.4 million people. Sorry, I wanted to zoom in a
And
little.
we have just over
How do
5 million. Is our website traffic more?
So this is ours growing over this period. I still want to make
This is
it
in
bigger.
Millions, okay.
So this is desktop traffic. That's the only problem. That's why Tevis doesn't like this. This is desktop traffic, which is not the majority of our traffic.
Okay, but it's still an indication. Jesus Christ.
Right? That's what I'm talking about.
Oh God.
And if you guys want to compare this just really quickly while I'm on this sheet, this is SoFi, everyone. This is Robinhood, which maybe, you know what, they lost investor confidence during the AMC, everything like this. But did Upstart lose confidence? Did Ally lose confidence? I also tried to get this for Lending Club, and there was another bank. I forget. Anyway, they couldn't source that data for me. This is all TipRanks data, just so people are aware where I'm getting these numbers from. But SoFi across the board is the only one out of the banks that I could actually compare it to that are public companies. I would love to compare this with Vero and Chime and all of these ones, but unfortunately we just don't have that data. So the actual selection of competitors that I could put it up against JP Morgan. It's just going to be unfair. And to our benefit, I guarantee you JP Morgan's also going down during this time. 200 and something billion dollars in deposits doesn't leave because people are using the app more. You know what I mean? So yeah. Anyway. What do you think?
I mean, I don't know how you could be anything but bullish on SoFi if you take an hour and read through the numbers and just listen to Noto speak for 20 minutes, do an hour of research. It's hard not to be bullish. I think the bear case gets smaller and smaller every quarter.
Yeah.
It's funny because everything is going against SoFi and their app sucks. like right now, whenever they're all working right now, SoFi, I'm using the app every day and I've noticed a really big reversion to the mean of how SoFi's app used to look like. It used to have a lot of these updates on it, but now like they took back a lot of those updates. Like the relay part of SoFi looks bad again. But there's a lot of signs that on the back end they're actually going to make their user interface just really, really good looking. So I'm really excited about that because more people are using the app and loving it. Like that's just going to be another like headwind in our favor.
Yeah, no, 100%.
Let's not forget,
It's
the people we're competing against, or people say we're competing against, they don't do what we do.
Yeah.
So let me ask.
I would say, go ahead.
Yeah, go. Okay. Well, I was just going to pivot the topic. So maybe just go ahead with your point, and then I can ask.
Yeah. Okay. I don't think. I think the way you need to think about Robinhood and SoFi are different. SoFi as a customer can be lacking in areas. As an investor, it's amazing in my opinion. Robinhood's the opposite. I think as a customer, you can be very pleased with their service. I think they are like, argue with me all day long, but they are innovators at heart. They make the best products. The problem is there's no moat there. Like if they adapt some new security lending or 1% matching IRAs, I guarantee you a M1 Finance, a SoFi, all of these people will come out with that once they understand how it's profitable.
SoFi's gonna eat their lunch in 4 years whenever they have all these quality of life back end like lowering their operational costs. There's no way Robinhood's going to be able to compete.
Yeah, it's not an apples to apples comparison. Obviously, SoFi's going to eat their lunch, Riley, because they're just an end-to-end offering that just provides an ecosystem of benefits that Robinhood just can't compete with. Mm-hmm. And so Robinhood is like, let's say, right, they're really, really good at one thing, and that's just one thing that SoFi does. And then they have a whole suite of other things. But I was just going to pivot the conversation because profitability seems to be the point that a lot of the stock movement or the bull bear debate hinges on. And the thing that I'm curious about is if y'all think that SoFi is going to have a Tesla moment where they reach profitability in Q1 2020 and then the stock like 5Xs immediately, because that's when, you know, a lot of analysts, it seems, can't look out to 3 or 4 quarters into the future and see the writing on the wall of what's coming. Only when they see the profitability printed, the ink's dried on the paper, are like, okay, this company's safe. I can breathe. They're going to make it. Let's put in some money. And so the reason why profitability has become such a big focal point has become because it is also coincidentally the point where stocks go parabolic, especially if they've been flat or abused for a long time. So I'm just wondering if we think that's going to happen similarly with SoFi.
So this is exactly what I thought about whenever you said earlier, and I wanted to bring that up, and I totally forgot. So I wasn't doing this saying that it's going to 5X once we go profitable. What I'm saying is that it's a possibility. And you were saying earlier that we're being compared to, potentially completely different companies and people don't fully understand our business, but a repricing in a company, whenever people do understand the business model, whenever we go from a car company to a data company sort of idea of what happened with Tesla, a repricing in the valuation of the stock absolutely could be priced in. Where right now we are a small bank that's worried about personal loans can turn into, oh, this is a one-of-a-kind bank plus issuer processor that is outmatching Stripe because our pricing to add in all of that in one bundle, including Technisys offering a core process, is just something that is unmatched. And then also we're able to fund that growth through a very profitable bank itself. That is a story unlike anything else. And that might remain a story investment, but if it actually does break out, it's going to have a Tesla effect where the stock shoots up and is no longer competing. Anyone else have an opinion on if it's going to 5X?
What's the short interest at?
Sorry?
What?
What's the short interest at?
Oh, I think SoFi's short interest hovers around like high teens.
Yeah, that's what I was going to say, like 15% or something. I don't check it often.
Granted, I mean, Steven brings up a good point. I think Tesla's was like 40 or something.
Yeah, I mean, keep in mind, Tesla had a huge short interest, and part of it could have been people covering to drive it spike up so much. Seeking Alpha is saying 11.36%, but I feel like it's not. I feel like it's higher because on Market Beat has every 15 days they change it. But look, it's certainly a double-digit shorted stock where if it starts going up and people have to cover, that is going to cause it to spike. If it's a 5x, I don't know. That's difficult. I mean, think about it. It's 681 from here. So that means it would need to get to 32.20 or something like that. That's big freaking jump. I don't know. I think more likely get back to high teens at some point. I think that's a lot more feasible as, I don't know.
I think if
It's
you're
hard
looking
to
at
say what could happen because people start covering. You don't know where they shorted or anything like that. But the real question is how much interest comes in from people wanting to actually invest in it once the premise is they're profitable and when analysts actually start giving SoFi the respect it deserves and starts increasing their price target. I think that's the real question. Because how can these analysts have a $7 price target on it?
Yeah, the price target is just going to follow the stock, which is ironic because it should be the other way around.
Yeah, 100%. There, no price target could keep up with what happened with Tesla, right? And it doesn't matter. It really doesn't matter. But I think someone wrote it very, very well in one of these Seeking Alpha articles. If you guys aren't on Seeking Alpha, please, give it a try. But
use Tanner's link.
Yeah, first link in the
description.
description.
In the description if you guys didn't know. But so what I was going to say is that
I'm going to have a conversation with Seeking Alpha about that. I'm going to have to place a call.
Yeah. So if you guys are thinking about this as a fintech, right? If you're more on the bias of the fin side, the finance side, and looking at it as purely as a bank, then it might be considered an expensive stock. If you're considering it more of the tech side and actually believing, that the AWS of fintech and these sorts of things that are funded by the bank is going to happen, then you actually think it's a very undervalued stock.
Well, and think about that analogy you just said. What was the big thing everybody used to say about Tesla? You don't understand it's a technology company, not an auto company, even though most of their revenue and profit came from automobiles and still does. But the question becomes, is SoFi a bank? Is it a finance company or is it a tech company? So if you use that analogy, it kind of changes the field a little bit.
Yeah, okay, just so we're all aware, I could get a Seeking Alpha shirt. Okay, they love me. And I love them, just so we're all aware.
Do they send you a hat?
No, I have no hat. Go get your hat, Steven.
Please stop throwing.
I don't want to walk next door, but I could go. All right, I'll go get it.
Steven, you're wearing like an HP sweater.
I know that. He was listening to Tupac wearing his HP sweater. It's like
I'll be back in a sec.
Yeah.
Oh my god.
He's a man of mystery.
Tannor, don't throw comments up because I just turn off the man. These guys, they always get me, man. I can't keep my cool on this podcast.
I know. Honestly, you're the worst. You're the worst for this.
Yeah, I had to turn it off. As soon as Amit joins, like, I'm going to make Tevis laugh. But I was like, fuck this. It's off.
So I can't shoot comments onto the screen. I don't do the funny comments. But, yeah, I think, you know what's also really exciting? Someone said in the chat, and we covered it a little bit, but the difference between SoFi, Buy Now, Pay Later, which I also learned has much higher interchange fees, versus Galileo and Technisys interchange fees, right? Or sorry, Galileo and Technisys Buy Now, Pay Later. Like I said, I already said this, but if someone has a MasterCard Buy Now, Pay Later, that is a Galileo client. That's going to be a really interesting, experiment, especially with, there could be other products that also, end up being shown on Galileo's side that actually give us a little bit more insight of who the clients actually are. Who are these 16 clients that Technisys, signed? I want to know that. Are they all Latin American companies? One of them was a company in Mexico, I think they said. I don't know how many of them were in North America. I don't know how many of them were Galileo clients. How many of these clients are being cross-sold versus, new, clients. There we go. There we go. Awesome.
I didn't want to get the other gear out because I don't know where it is.
What do you got? You got the loafers?
I mean, I got some stuff.
I hope they're paying you for this ad spot, this plug to 150 people.
Anyway, guys, so what else do we need to cover on SoFi that everyone else is, what are you guys excited about?
Well, I do want to say that SoFi's general counsel just sold at the very top of the peak. He sold $1.6 million at right when it hit $8.
Yeah.
And he got out pretty quick. So good for him. Sold.
I think he sold 200,000 shares.
That's right.
Yeah.
Did he get those shares as options, or did he purchase the shares with his own money?
I'm
Probably
not
not.
sure. He's been with this company longer than Noto, like twice as long. He's been there since 2013 at least. So I don't think he's doing it because he has any grievances about the stock or the company.
He owns 1.2 million shares. He sold 200,000 when it popped to $8. The poor man, along with the rest of us, has been abused by the stock for the last 2 years. Like, let him get whatever he got, like $1.6 million to spend with his family, enjoy. He still owns a huge portion, 15% of his position. Who cares?
And keep in mind that he may have been issued these shares when it was not a public company.
Yep.
And he took an opportunity to cash in on his hard work. I have no problem with that.
Mm-hmm.
Just to give some, insight into, for anyone that's watching that might not even know what I'm looking at right now. You can find these, the little Form 4s on the SEC filings, on the, investor relations page for any public stock. Okay. They all have to announce this. If there's any buying or selling, anything like this, they roughly look the same. Sometimes you'll see it a little bit differently. But pretty much this is who sold over here, the date at which they did sell. And then down here, this line is the most important. He sold, that's what the S is for, 200,000 shares. And then this is what he has remaining, the 1.25, million shares left, and, his selling price and everything like this. So that's pretty much how we're getting that information.
Tannor, do me a favor. Can you just go back to my article and bring up the Noto purchases?
Yes, absolutely.
Thank you.
Or should I use my own?
No, use mine. Mine's better. Sorry.
No offense to the article, but that was the one part I didn't like. It was so ugly, this chart I'm about to bring up, but I'll bring it up for everyone. I don't know how he did it. He did it in like Microsoft Paint or something. I'm not sure.
You know why it's beautiful? Because it's not my work.
Oh, I see. Then it's beautiful. If it's free.
Yeah. It was from what was the site? It's from
like Market Beat or something?
No, it's not Market Beat. It's the other big one that shows all the insider buys.
Investor Place?
Open Insider, I think.
Oh, yeah. Thank God we're looking at this thing. Look how ugly. Okay. Sorry, Open Insider or whatever he said. Obviously, I don't use them. Boom.
I mean, look at the amount of times Anthony Noto has purchased. He purchased 4 times in 2021, and I don't know how many times that was in 2022, like 18 or something like that. It's insane.
Yeah.
So their chief legal selling 200,000 shares and rewarding himself for his hard work, I have no problem with, especially when the CEO is just going gangbusters buying shares.
He could have left the company when there was a sex scandal in 2016, the Me Too movement. He could have left when the moratorium hit. He could have left at any other point, but there's not a bearish take on this, in my opinion.
He's also not leaving, right?
Yeah, he's not.
Like,
yeah, I mean, and Tannor, I'm going to say this for you. At the end of the day, because I know Tannor loves when I say that, at the end of the day, Noto has purchased 2.17 million shares with his personal capital, and he has allocated over $11 million of his net worth to buying shares of SoFi.
Sorry, I couldn't stand it. I had to switch it.
That's fine.
Yeah, especially after we know his PSU position and the amount of skin that he has in the game. The fact that he just keeps buying with his personal funds is ridiculous, because if they don't hit those tranches, then those PSUs are screwed, and that's ample encouragement for him to actually get them there.
He's betting on himself, he's betting on his team, and he's betting on SoFi succeeding. And as a CEO, that's what I want to see.
Yeah, no, it's you can't find this amount of insider purchasing in many stocks right now. You know what I mean? This is large conviction from a very motivated CEO that we probably have another 10, 15 years with before he might even consider stepping down into his retirement or something like this. Like, this is a long runway for Anthony Noto.
Did y'all catch Chamath's study on the last All In Pod, where he was analyzing like commercial CEOs compared to like founder CEOs, and what type of CEO takes companies to the $1 billion finish line, or the $1 trillion finish. I don't know, but like, he was just talking about how CEOs that kind of get their start becoming analysts or really in the banking sector typically are the ones that perform better during recessions and in the long haul. Founders typically like trip over themselves because they get too focused on one specific part of the business. Did y'all hear about that?
Yeah, I mean,
I listen to All In every week. Yes,
it's
I was thinking
hard
when he was talking about it.
It's incredibly hard, Riley, to find operators that can take a company 0 to 1 and then also be the same ones to scale it to 100 million, a billion, 10 billion, 100 billion, a trillion.
Yeah.
That's because fundamentally what is needed from that operator is massively different at each of those stages of that business, which is why oftentimes when companies go public, they move their founder to a board position and they install a new CEO that has actually had experience handling public companies.
I also want to add, as we sort of wrap mainly, that SoFi is a really, really exciting company. What I would also want people to do is that, like, it, especially if your portfolio, like, I know some listeners are very heavy into SoFi. And obviously, like if you're listening to one stock every single week, I mean, you might be a little bit biased in that regard, but that you check out other fintechs, other banks, other payment processors, see how we compete, see why we're winning, not just our numbers, compare them. You know what I mean? It's just important to look at the sectors in general, because then we actually understand how we're winning. And that's why I'm covering PayPal and Robinhood lately, is just because it really does show us how well SoFi did this quarter.
Yeah.
Dude, I want to talk to more bears. I mean, sure, Chris came on, he talked about the delinquencies, and that's fine. And then SBC was a huge issue. And then Chris Hager sort of broke that down with the Chris LaPointe interview. And so I think the most interesting SoFi tweet this week, probably biased, but was Riley's tweet, where all he tweeted was like the ticker symbol SoFi, and he got like an insane amount of engagement off that. And then he retweeted that and said, okay, echo chamber confirmed, because it's just our entire following, people who are watching us consistently, are all bullish on SoFi. I would imagine the majority of them already know the bull case, and they just like to hear it reiterated, which makes me skew more to the opposite side to say, I want to actually hear today in this market with the Q4 earnings report out, what are some of the bear cases still left standing? And do they actually make sense, or are they just broken down in 5-minute conversation?
Mm.
Can I give a couple that just some things that are not as good as I'd want them to be?
Sure.
Tanner, before you do, have you looked at the 13Fs? Do you know, I actually forgot to look at them. Do you know which banks have short positions on SoFi? Because maybe we could get an analyst report from one of them.
Yeah, I mean, if we can actually get like a short report, that would be great. I'd love to break that down.
I'm going to look right now
Um,
while you're going over your stuff.
Yeah, I definitely don't check that enough, truly.
That'd be a really cool thing to see.
Well, they're usually extremely long, so it might take me a day or two to actually go through it.
ChatGPT can help shorten that for me.
Yeah. So one thing that I found just looking at today really was how many members we have. The growth in members is great. The growth in products is great, but I feel like sometimes they're actually growing in tandem, and they shouldn't be. If the cross-selling effects that we're talking about are so great, because obviously this is what SoFi is touting as some of the strongest statements of their business, is that if we offer all these different products, from a checking account to an invest account to a money account, to a personal loan, that a single client can be with us for so many facets of their actual financial life. One of the things that I'm not disappointed by, however, the growth is just maybe not what you would expect. Let me throw this up on the screen. This would be something that I've added to my chart recently, and this is products per user. Okay. So the amount of people, obviously, simple math equation. I'm just dividing the two. Okay.
Just so we can see cross-selling, right?
Sorry?
Just so we can see the flywheel in action.
Yeah, pretty much. Just so then we can, on a single quarter, it doesn't mean anything. Across a bunch of quarters, it might tell us a story. So just really quick, let me see if I can. There we go. So from Q2 all the way up to Q2 of 2022, we went from 1.6 or 1.36 to 1.5, and then actually starting to decrease here in the later quarters from 1.52 to 1.518, 1.512. It's nothing crazy, but it is just showing that really, people are coming here for particular products, and a single client, like mainly, either has one or two, products. We're not actually seeing a full flywheel of clients that have a money, relay, credit card, home loan, student loan, all these things. And if you're saying, well, Tannor, we need some time to get there, then we shouldn't see decreasing quarters over the last two, even with small declines, right? Now, what I will say is that SoFi has been putting out a lot of new products, which could really increase the product per user. However, they're not actually putting it into quote unquote new products. They're putting it into SoFi Invest. So whenever we actually look at the SoFi Invest product here, this is where we're seeing crypto, options, margin, all of these different things that could greatly improve our average revenue per user. But yet it's still, if you have a SoFi Invest account, is just still under that account, right? If you have a SoFi Money account and then get buy now, pay later, you still only have one SoFi Money account. So in that regard, people could be more engaged. Like average revenue per product in the last year went from $21 to $40 in a single year. So people are using the products more often. They're using it at a more efficient rate. But the per product flywheel, the cross-selling that they said that we're doing, is definitely not painting a stellar number, So that's pretty much one of them. Anyone want to touch up on that, or do you want me to go straight into the second piece, which we've already seen a couple times?
Go for it.
So I will also jump into this number right here, customer acquisition costs. Although we were actually a large student loan lender back then with a very, very reduced amount of financial services products, okay? Meaning SoFi Money, SoFi Invest, and Relay. Those are really the main three. Those should be extremely cheap whenever it comes to referrals and actual marketing. It should be extremely cheap to actually sell those products to new users. But what we're actually seeing is the opposite effect. So even though our ratio between SoFi lending and SoFi financial services is increasing, well, so is our customer acquisition costs. And now we're starting to see some of the highest customer acquisition costs that we've ever seen. And that is not exactly, the cross-selling picture that they actually originally are painting for us. Now that doesn't matter because we're actually, becoming more profitable every single quarter. But like I can be the bear if you guys want me to be the bear. I've got the stats,
So Tanner, why do you think they're paying more? Simple as that. Like, why do you think? Shouldn't it? It's counterintuitive, right? It should be cheaper as we get more members, right?
Well, as that flywheel increases, especially.
Yeah.
So it's also a couple things, right? I'm also not giving SoFi enough credit. With the our ability to be a bank, think products like direct deposit are so much more profitable to us than other products before it. And so we are willing to spend so much more to acquire a direct deposit user. For example, like saying, hey, whenever you guys sign up, we'll give you $250. We'll give you $300 for signing up with a direct deposit. That is a customer acquisition cost. So, that's sort of the, idea there, right? Is that we're increasing because we have more profitable products. Any questions you wanted to bear? Give me some counters. Tevis.
I said I wanted to bear, but I totally tuned out when you started talking. I was paying attention to the comments.
You said you closed it out, my friend.
Yeah, no. I mean, the customer acquisition cost increasing, not great, but I'll start getting concerned about that when expenses are running rampant and we're not trending towards profitability.
I'll look for a short report and see if I can find one and circulate it. Tanner, can you go to the link I just sent? Well Wisdom.
Yep. Yeah.
Does anybody look at Well Wisdom ever?
Never heard of it.
Yep.
So it shows all the hedge funds and financial institutions that own stock. Can you scroll down, please? Keep going a little bit. The next part. Yeah, this part. So filter by shares held. Let's go to who holds the most shares.
Oh, sorry. Yeah. Nope.
Vanguard has 68 million shares held.
Yeah, but like Vanguard owns, it's like
No,
the biggest holder
that.
of everything.
I get that. BlackRock, State Street. It's interesting that Citadel has a put on it, but keep scrolling down. Look where the banks start to come in.
Yep, there's MS.
Yep.
Goldman, JPM, Schwab.
Wait, what do you say? Wait a second, Stephen. What are you trying to say to me right now?
I'm not trying to say anything. I'm just saying, look where the banks come in. Just saying.
So I want to know if you play into this conspiracy because a lot of the comments are going
There's
to
no
say
conspiracy.
Ooh.
I mean,
So
what conspiracy that you have a Goldman Sachs ex-bigwig on SoFi's board and Noto's the next Goldman guy? No, Goldman's getting rid of Marcus. There's no conspiracy.
I 100% am a big disbeliever in that. I don't think these banks, especially like analysts and everything. I truly don't think like the analysts, although they work for the banks, they don't work for the banks. They work for themselves. Okay. Like their reputation, their pay is based on how accurate that they can be. They are not going to take the dive by putting a bad rating on a company and get it wrong, because then like a Morgan Stanley analyst doesn't have to be a Morgan Stanley analyst forever. They can get hired by any other big bank. And if they're very accurate in their predictions, they'll make a lot more money somewhere else or go into, higher level management. The SoFi community is at least in my opinion, is short thinking this idea that banks are out to get us in some sort of weird way by making analysts do these small price predictions and everything like this. It's
Did
not
I
true.
say that? Did I say that?
No,
I didn't say that.
I just want to
That's
clarify
not what
my
I said.
position.
I did not say that. You're going off on a tangent, sir. I did not say anything of the sort.
Yeah, but
But
it's
if you
also
think that Morgan Stanley, Goldman Sachs is placing a multi-billion-dollar bet because there's an ex-employee is crazy.
That's not what I said.
Yeah, but Tanner, it's also super naive to think that if you have these parties that are competing on each other on one layer, and then they have a secondary layer where they can artificially manipulate a stock price with a low float, small market cap, high short interest stock, clear ulterior motives that they're just not doing that out of the goodness of their own heart or whatever. I just think that assuming that nothing nefarious is going on is just as naive as, or just as wrong, let's say, as assuming that something nefarious is.
I'm just
There would
saying
be
it's
better ways of
interesting where the money's coming in. And when you look at the top 5 with Vanguard, BlackRock, and State Street, that just means SoFi is getting more entrenched in their funds, which is good for us. That's all I'm saying. It's a good thing. And then the banks are coming in at some point. But, it's no conspiracy. It's facts.
I just think bank analysts are looking at this like a bank. That's
Who's
what I
talking about
believe.
bank analysts? I'm not talking about bank analysts.
No.
Working at the math.
But what I would also say to Tevis's point is that I would think that there would be higher forms and more appropriate, more capital efficient forms rather than putting billions of dollars down for some sort of corporate espionage plan. If they are trying to hold down, like holding down the stock does not hold down the company. It might in ways of being able to access capital and these sorts of things. But for the amount of billions that they would have to shell out, they would be hurting SoFi in the small millions.
Yeah,
that's
two
a
things.
1,000-to-1 ratio. They would not be taking that bet. There's so many other players. It doesn't make any sense.
I got to
Totally
tell you, I
fair.
want to get more information about the Citadel Advisors put. They have a huge put out there on SoFi.
So two things on that, Tanner. It's not the fact that they're holding down the stock because they think that SoFi is this disruptor that's going to come eat their lunch, but more so they're holding down might be the wrong terminology, but they're holding down multiple small market cap, low float stocks so that they can ride it both ways, short it on the way down, and then when it reaches some semblance of profitability or a turnaround, they can scoop up all the shares cheap with the money that they just made on the puts and then ride it all the way up while raising their price targets all the way. It's, a tried and true method that's been done all across the industry. SoFi is just one of the companies, not the only company. I'm just saying because they're all playing in the same space, it just opens a door for shady shit to go on.
Yeah. I feel like this is gonna be a bigger argument in 4 or 5 years when people can actually notice that SoFi is taking market share, or at least if we do have a big financial institution start using SoFi's platform and banks start feeling the heat, this argument of bank analysts lowballing SoFi, I think will be more salacious.
Well, the truth is, people do know we're taking market share. I think maybe some people where we get lost is that there's still politicians out there calling us a student loan company. Honestly, I wish we were we're the opposite of a student loan company. We can't get student loans to save our lives.
Isn't that
and
such
now
a
people
bull
are calling
case?
us a personal loan company. I just think
Isn't that a huge bull case that in the face of adversity, they pivoted and they were able to create revenue streams outside to augment what they lost and became a much more powerful company? And they're on an EBITDA level profitable with student loans firing at 35%. I mean, it's a huge bull case. Student loans are going to come back this year at some point.
Hopefully.
or next year.
Hopefully.
I'm just going to say it on this pod, and we can look back on it 12 months from now when Bank of America or JP Morgan or Wells Fargo, one of these big players is going to announce that, hey, now we're on Galileo. And then coincidentally, what's also going to happen is they've also taken a huge stake in SoFi, riding their own news that they're a customer all the way up.
I have a question for each of you to answer. What is your percentage that SoFi gets acquired in the next 2 years?
By who? Anyone?
Anybody.
Low.
Oh, I hope not.
I'd say
I have no idea.
5%. Not because they won't get offers. I think, I've talked about Goldman before and others, but I just think Noto's going to be hard-headed about it unless it's like a hostile takeover type of situation.
Is it that easy to take SoFi over? All you have to do is just buy all the shares?
Well,
I mean
mathematically, yes.
so there's not any poison pills or
then we go into that rabbit hole with poison pills.
Yeah, but if you do go into that rabbit hole, you don't want to be a shareholder. Like,
Yeah, I just don't
it's
know
called a
how
poison
it
pill
is
for
set
a
up
reason.
now.
It's a self-destruct. It's a we kill the virus, we kill ourselves. But I think for me to even make a percentage would be like an absolute guess. Like truly,
No, but that's
truly,
all it is. Nobody can predict the future. It's a straight guess.
Yeah, I don't know, 5%. I think it would be surprising that they're not already putting offers. I like it. We have a great offering. Who wouldn't want 5 million users at a large growth rate in terms of their deposits and everything like this, at a price to book ratio practically. I mean, they might have to pay 2 times for it or even 3 times, but the growth rates just seem great to stop that adversary, in my opinion. But I'm also not JP Morgan. Like, Jamie Dimon's got his own plans.
I want acquisition rumors, but no actual acquisition, because that's what's going to get the ball rolling in terms of when one of them starts to actually put forward a number, then they're all going to be swarming. And, whatever number does come out, it has to be tantalizing enough to convince the majority of the board, even though they might never convince Anthony Noto. So we'll see.
I'll make a prediction. SoFi does not, like someone said in the chat here, that Apple could be a possible acquirer.
No way.
If SoFi gets acquired, I'll make the prediction that it's not from a non-banking institution.
So did you see the rumor somebody tried starting on Twitter?
What?
Maybe not.
That Musk was going to try to buy SoFi for Twitter after he started talking about payments.
Oh yeah, if they're using Robinhood for the charts, they're not even. You know what I mean? They could have done a Twitter, SoFi partnership, and that doesn't even seem to be like it's happening. So why would So I think he'd be closer to buying Robinhood.
I wouldn't be surprised if SoFi gets offers, and I think there's a small percentage chance, more than 5. I think there's a 15-20% chance that it could get acquired, because with their back-end tech growing, it may be more beneficial for one of these big legacy outfits just to acquire them for the back-end technology and then integrate into it.
Why not a year ago? They're like I don't even know about.
But how many people actually understand what SoFi does? That's the thing.
Yeah.
Here's the other interesting aspect. Maybe we can talk about it. If there is a non-financial institution that makes a bid for SoFi, my guess would be the banking charter would be a huge boon for them. In other words, like maybe not Square, but some other institution that wants
Square wouldn't be a bad one.
Well, I think they would be a different type of bank charter, right?
Them or PayPal, I mean, they would benefit greatly.
No, I disagree. I
so?
greatly disagree. Think about how big Square and PayPal are and have avoided a bank charter like the plague. Okay, they don't want a bank charter. They don't want the regulation. They want nice partnerships and renting charters, so then they can get the benefits without the regulations. They obviously don't want the headache. PayPal has been around for 20 years now. They absolutely could have gotten a bank charter by now. They don't want one. I think that's the truth. They're not going to touch SoFi.
Yeah, Apple, the same thing with Apple. Like, if Apple buys SoFi, then they're gonna have the federal government going through their entire business.
Yeah, if Apple wanted to, they wouldn't have done the credit card deal with Goldman. They would have just done it on their own.
Goldman is losing so much money on that deal.
Well, they're shutting down Marcus at some point.
Sorry?
Square likes Bitcoin too much. They'd never. They don't want a bank charter.
Yeah, all I'm saying is I wouldn't be surprised if we see rumors at some point that somebody's trying to acquire them. That's all.
Especially after
any last thoughts? Anything that we should, get people thinking about, or any other things that you saw in SoFi, news or competitors?
People should go watch Anthony Noto's speeches.
Riley's all over that one.
I really think that there's something to. I think their strategy for the AWS of fintech is going to be some sort of marketplace instead of it being like super focused on next generation banking. That's something that we can get into a later pod, because I'm still just thinking about it. I've talked to Bender about it for a bit, but yeah, that's what I want to just say that just so I can call back to it if I'm right, so I look smart.
Guys, I appreciate you all being here. Everyone in the chat, I appreciate you guys being here. If you could go in the description, check out everyone's channels. They all make great content. If you're wanting to diversify from SoFi as well, make sure you check out Steven, because he covers a lot more companies than SoFi and brings the same level of due diligence to all of his articles on Seeking Alpha.
Diversification is important, and go to Tanner's link for Seeking Alpha, even though he doesn't have the hat. Go to his link.
There we go. There we go.
Maybe they can give you a hat if you sign up some people, Tanner. Can we?
Yeah, no, I'm sure if I asked, they'd send one.
Can we negotiate that for you, or?
In all seriousness,
I
the research outside of the articles, put the articles aside, the research on their platform is phenomenal. They have a 10-year look back on the numbers, and the analytics is very good.
Yeah. Then now what's going to happen is now we're going to end the stream, and Steven is going to be like, okay, guys, now stick around for another 2 hours. Let's have a conversation.
Yeah, maybe you play some more Tupac for us, Steven.
I didn't even know that I went into the room.
So for context, when Steven, so when everybody joins, you're put in a waiting room before you actually get to the actual room, because the host has to accept you. And when Steven just pumped in the room, he was setting up his camera, just blasting rap music.
I missed it. Damn.
Wearing his HP sweater.
Yeah.
Oh my God.
Steven, I love you, man. Thank you so much. And let's do an actual other call on my channel. I want to have a real, another interview with you. Bring all the charts.
This week was difficult. Next week, I'm good, though.
All right, man. We'll talk. All right, guys. See you next week.
Thanks, everybody. Links in descriptions.
Bye.
Bye.